Hey everyone. In ASML's latest quarterly conference call with Wall Street analysts, these Wall Street analysts were able to get some key information out of ASML's management. They were able to ask good, insightful questions that got ASML management to reveal key insights that I wanted to share with you in this video. So let's jump right into it. Let's take a look at what we can find out about ASML.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the first question from TD Cowen, Krish Sankar asks about EV orders, EUV orders, I should say. And the CFO jumps in to give an answer about the question and saying that you're absolutely right in your conclusion that order intake is very lumpy. And I think that's what we've seen in the past, and we've been saying that for many, many years. We said it last time when the orders came in very high. We say it today from the vantage point of some of the orders that came in pretty low. Interesting, right? So ASML management confirming to this analyst saying that you're right. Our sales are lumpy. We can get a quarter of really strong sales, and then we might be dry for 2 quarters, and then we get another big quarter, and we might be dry for a year and a half, and then we get 3 quarters of strong orders. And so, yeah, you're right. But you know what? We've been telling you that for a long time. We've been transparent with you, Wall Street analysts, about our lumpiness in our orders. We've told you that, when sales were really good, when orders were really strong, we told you, look, don't expect this to continue on a regular basis. Our sales could be strong this quarter and it could be flat next quarter. So don't expect these good times to continue persistently. And now we're reminding you again when their orders, by the way, were not very good in the latest quarter. So the CFO reminding this investor, this analyst, that look, because our sales are low now, don't think that they're going to be low forever. It's our sales go up and they go down. Right now they're kind of low and we expect it to rebound, especially for 2025. They expect a really strong year in 2025. So the CFO goes on to say, it's pretty clear that there is a few usual suspects absent in the order intake. And if you look at the plans and announced plans of some of our larger customers, it's pretty clear that in the next couple of quarters, significant orders need to come in. Now, it's my estimate that the unnamed company here is Taiwan Semiconductor Manufacturing. They're one of ASML's larger customers, and given the plans that Taiwan Semiconductor has announced for 2024, given the capital expense that they've announced for 2024, and looking at its latest quarterly results, which I did and I have a video out on, you could go check that out after this. It looks like they didn't order as much in the first 3 months of the year if they plan to hit that annual pace of orders. So it looks like for the next 3 quarters, Taiwan Semiconductor's orders are going to ramp up. They're going to ramp up. Or at least that's what's insinuated by their annual target, their forecast that they told investors, and what they've spent so far suggests that there needs to be more spending to hit their goal. And they want to hit that goal because Taiwan Semiconductor needs the increased capacity because they're planning for an increase in customer demand as well. The CFO saying, if we look at 2025, we're looking at a significant uptick. So not just an uptick, but a significant uptick. So it's shaping out to be a great year for 2025. 2024, management has said, is going to be a transition year, relatively flat revenue growth, but 2025, they're expecting a boom. Goes on to say, I would say that a healthy part in the order intake is related to China. Order intake is more distributed geographically. So China is a meaningful part of ASML's business, which is a risk, right, given the geopolitical tensions and given ASML's relationship with the United States government and how it, I don't want to say follows closely the US recommendation, but it considers US recommendations, and since the US has banned exports of this higher level technology to China, ASML tends to follow, and their exports to China might be constrained as a result of the geopolitical tension. But it's not the entire business, right? Their orders are more distributed geographically, and they will elaborate on that next. So the CFO or the analyst follows up and says, 3 months ago, the sales to China was roughly 10 to 15%. Has anything changed since then? And the CFO saying, no, nothing has changed. Our perspective has not changed. The rules have not changed. Of course, there's continued discussions on export controls. So these are ongoing discussions, and there has been a concerted effort among US allied governments to restrict some of the cutting edge technology to China and other countries that they feel are unfriendly, so they say. And so this is something the analyst is concerned with, ASML, how it's going to impact its business going forward, because that's a meaningful part of its business. So the CFO goes on about China, saying that China, relatively speaking, the orders are high right now. From that vantage point, it's gone down a bit, but it's still strong. And the reason that China is strong, both in absolute terms and as relative terms, is because the rest of the world, the demand, or at least the sales and the shipments in Q1, were relatively low, which was no surprise. So the reason why the sales to China have appeared larger than usual for ASML is because sales to the rest of the world were relatively lower. And that's why the sales at China look that much stronger. And China could be building up in anticipation of further export controls. It wants to have that technology ahead of time just in case there's more export controls and even the lower level technology is banned to that region or restricted to that region. It wants to continue building up at a steady rate its technology capability. So the market being in recovery means that customers are first driving up the utilization of their tools. And after the utilization comes to a certain point, then they'll start ordering new equipment. So this is in relation to the rest of the world where demand was not as strong for ASML's products. And what ASML is saying is that their customers usually try to max out their usage of their existing tools. And when they see it's reaching a certain point, then they order the new products. And so far, it hasn't reached that point yet. And that's a key thing to distinguish here, is that ASML has good information about what's happening with its customers. ASML has described that relationship more as a partnership than that of a relationship between a customer and a supplier. The more they work together, the better the outcomes for both. And so they have been working together, being in discussion, so that the customers can give ASML a little bit of a heads up, like, ASML, look, in 6 months, we're going to need a lot more of this product. And so ASML can know that ahead of time and build up that inventory ahead of time, because ASML, some of their products could reach in the hundreds of millions. And so it's not an easy purchase to make. So it's not like ASML can just wait for that purchased order to come in and then they start building the product. It's more nuanced than that. And they have conversations with these companies that tell ASML, look, in the next few months, we're probably going to make an order, but we have to go through this whole internal process before we can make that order. But we want to give you a heads up right now so that you could begin the process of building that so that it's ready by the time we need it, or that it's ready sooner than when we need it, rather than having you wait until we actually officially make the order. So that's been going on for several years now, and that relationship has developed between ASML and its suppliers to the level it is today, which helps ASML build out inventory ahead of time, or build out products ahead of time in anticipation of those orders, so that then they can have it ready sooner rather than later for their customers that will need it. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.